Let me read out some of the rationale for the policy today. We cut the repo rate by 25 basis points and the associated rates by the appropriate amount. Banks have started passing through some of the past rate cuts into their lending rates. Headline inflation has evolved along the projected path. The impact of unseasonal rains has been moderate so far. Administered price increases remain muted, and the timing of normalization of U.S. monetary policy seems to have been pushed back. With low domestic capacity utilization, still mixed indicators of recovery, and subdued investment and credit growth, there is therefore a case for a cut in the policy rate today. However, of the risks to inflation identified in April, 3 still cloud the picture. First, some forecasters, notably the IMD, predict a below normal southwest monsoon. Astute food management is needed to mitigate possible inflationary effects. Second, crude prices have been firming amidst considerable volatility, and geopolitical risks are ever present. Third, volatility in the external environment could impact inflation. Therefore, a conservative strategy would be to wait, especially for more certainty on both the monsoon outturn as well as the effects of government responses if the monsoon turns out to be weak. With still weak investment and the need to reduce supply constraints over the medium term to stay on the proposed disinflationary path, which is down to 4% in early 2018, we feel a more appropriate stance is to front-load a rate cut today and then wait for data that clarify uncertainty. Meanwhile, banks should pass through the sequence of rate cuts into lending rates. So I think the policy today I would characterize as neither conservative nor aggressive. It's in some sense a Goldilocks policy, just right given the current situation. In addition, I hope to be able to announce a new set of bank licenses, at least one set of bank licenses by August end. We are undertaking a review of all regulations governing markets to see where there is scope for further liberalization once macroeconomic uncertainty diminishes. We're also doing a deep scrutiny of all our past regulations in general to prepare a greatly simplified list of master circulars. Thank you. Happy to take questions.
Yes. Who do we begin with? Saloni?
Thank you so much, Saloni from Bloomberg TV. Sir, in your last 3 policies, we had the word accommodative policy stance. It's not mentioned here. Looking at the inflation target that has been revised upwards, do you see that further room for monetary policy easing is very low, considering that from September we will see some base effect also on inflation? And another part, to this question, government, on the other hand, has been putting a lot of responsibility on RBI to prop up growth. Do you think that it's time that some bit of burden is shared with the government to prop up growth?
Well, start with your second question. I don't think the premise is right that the government has been putting the burden on the RBI. The government has been acting on its own to try and reduce bottlenecks, create new pathways for growth. So I wouldn't agree with that part. I think we both play together. And as far as the rate cut today goes, it is an attempt to ease the way for further investment to reduce medium-term supply constraints. As far as the first part of the question goes, we have done what we think is appropriate given the data. We have always said we are data contingent. There are possibilities if the monsoon turns out much better than forecast by various forecasting agencies, where there might be more room that emerges, or if the actions by the government are such as to contain the possible inflationary effects. So we've used the room that the data gives us, and our policy will continue to be data contingent. Urjit, would you like to add something there?
No, if I could just say that, although the forecast for early January has been increased to about 6%, it's still a marginal increase, but we have emphasized the risks on both sides.
You've said that a more appropriate stance is to front-load the rate cut and then wait for data that clarify uncertainty. What is the data you're waiting for? What kind of uncertainty and what action? Also, you have so far maintained that you want a 1.5% to 2% corridor of real interest rates. If the inflation forecast is 6%, then you have already reduced the corridor to 1.25%. Are you willing to reduce it further?
Let's start first with the question of what data we're waiting for. Clearly, the biggest uncertainty at this point is the outturn of the monsoon, but also the policy reaction. As you know, there have been El Ninos in the past with reasonable rainfall, poor rainfall, which has not led to a fall in production, and a fall in production which has not led to inflation. So each path of this sequence is fraught with uncertainty. So we need to figure out how this plays out. And clearly government action is very important, because I think the link between all these has been broken by appropriate government action. So for example, 2002, 2003, there was very weak rain, but you had very limited inflation, partly because of government action. So I think we need to wait and see how all those factors play out. That would be the biggest factor that is on our mind right now. Of course, the pickup in the economy, we think the economy is in recovery, still slow recovery, as evidenced by corporate numbers, but it could pick up faster, or it could pick up slower. That will have an impact on how much room there is to play with. So these are factors that we will be looking for. Of course, there are the oil prices. We believe, as do most forecasters, that there is some upside checks on oil prices, which is shale production, which comes in at $70+ but does this prevent geopolitical shocks from affecting oil prices, and how does that play out over the medium term? OPEC is meeting this week. That will also affect how oil prices move. So there are a considerable number of uncertainties. As I said, we've done what we could given the room that current data allows. In fact, we've sort of erred a little bit on focusing on encouraging investment, given the need to alleviate medium-term supply constraints. Now, going forward, if more room builds up, we will have more room to take action.
No, my point is, as you said, you have erred a little. You've gone down below that 1.5% Lakshman Rekha that you gave yourself. Sorry. Will you be willing to err further?
No, I think the point we've always made is that we have to be on the disinflationary path that has been set out. So whatever room builds up on the disinflationary path, we will use. But we're not going to move far away from the disinflationary path. That wouldn't make sense, given that we've just building up credibility to stay on that path.
Good morning, Governor. This is Gopika from ET Now. My question is largely on the banking industry and the performance of the banks as we've seen in the fourth quarter. Many believe, or there is a view, that RBI has been behind the curve in fighting the asset quality in the banking system. Looking at the fourth quarter numbers, we've seen there are no reasons to cheer. RBI has been collecting data from banks with regards to their exposure to large borrowers. And bankers and also industry experts believe that RBI is not giving any early warning signals to the banking system to help them fight this asset quality issues. So your comments on this?
Bankers fully know the asset quality issues. They've been sitting on them for a number of years. So they have to deal with them. It's not RBI telling them. They know about the asset quality issues. So I don't think RBI is in fact, what we're doing is unearthing cases where the asset quality issues are being suppressed. What we want is a quick cleanup of balance sheets and a restructuring of situations where assets can be put on track. Nobody gains when the asset is lying without further progress, without new funding to get it restarted, or without fixing all the problems that exist. The government has been taking actions to fix some of the problems. The banks have to take actions to fix other problems. Not recognizing the problem is the worst possible action in these situations. Where we are pushing at this point is to also advise further capital so that the banks can fully recognize the problems and make provisions accordingly. So in that sense, I think problems are known, they have to be dealt with, and often the best way to deal with them is to deal with them now. And that's what we've been pushing the banks. We restructured the whole process of recognizing these bad assets and working with them. That was the Joint Lending Forum process. Wherever there are problems, we are talking to the banks and trying to make the changes that are needed to make that move forward. We have given a number of relaxations where we believe the relaxations will help set the asset back on track. But where the primary purpose is to postpone recognition and not deal with the problem, we have been very reluctant. So when somebody says, don't make me provision for this, we say no. The real problem is when you don't provision or don't recognize it, it comes back to hit you in a much bigger way later. So do it now. That's been our message constantly to the banks.
From the Financial Express. So you've revised the growth number downwards and you said that there's a downward bias. Would you like to tell us how much it could be? 25 bips more maybe?
I think that the downward bias carries forward the CSO's own downward forecast for the previous year, that there has been some slowdown, especially when you look at the GVA, the gross value added terms on a quarter-on-quarter basis. Secondly, while there has been some progress, maybe even considerable amount of progress in declogging the investment pipeline, the evidence on the ground is mixed in terms of the actual production, and therefore these kinds of factors have been programmed in for the lower growth. Thirdly, also the issue of how much the banks will be able to fund the extra credit growth going forward. They may not be able to do that immediately, given the capital requirements. So these are the downside risks to that.
How much of a downside do you
Well,
see at this point? I know it's difficult, we don't have, but
it's
given the corporate numbers where profits have fallen for a sample of 2,000 companies by 25%.
I think we've given our best
Our
estimate.
chart, yes.
So around that, you can pick any, but the best estimate or the most or the center of the estimate is 7.6.
हाय सर, दिस इज़ अमोल फ्रॉम जी बिजनेस. सर, आज का अगर रेट कट देखें तो टोटल पिछले 5-6 महीने में टोटल 75 बीपीएस पॉइंट हो जाता है. लेकिन अगर बैंकों ने जितना रेट कम किया है, विच इज़ नॉट मोर देन 25, अगर बेंचमार्क देखें तो इट्स 15 to 20 बेसिस पॉइंट्स. आपको क्या लगता है 75 के बाद कितना स्कोप बचा है बैंकों के पास रेट कम करने का, और उनके क्या चैलेंजेस से रेट कम नहीं कर पा रहे? एंड द सेकंड थिंग सर आई वुड लाइक टू अंडरस्टैंड इज, सिंस मोस्ट ऑफ द PSU बैंक्स नीड्स कैपिटल, व्हाट कुड बी द वेज टू रेज द कैपिटल? अमलगमेशन की बात हो रही थी, मर्जर की बात हो रही थी, क्या वो एक अच्छा विकल्प हो सकता है?
Let me start with your second question on the capital issue. How much? First, I don't think anybody immediately needs capital for their needs. Going forward, they need capital both to absorb some of the provisions that they may need to make going forward, but also for, as the economy picks up, to finance the lending to the new projects. So that will be the need for capital. Capital can be raised many ways. One way is issue new shares if you have access to the markets. The other is the big owner, who is the government, putting in more money. A third possibility is reducing dividends in case the bank is not in a very healthy position. Those are all possibilities that need to be considered. Rights issues instead of a targeted issue. Those are all possibilities that need to be thought of. On the first question, 75 basis points so far. You can see the markets. If you look at the commercial paper markets, you look at the CD markets, there you see the effects of the rate cuts. Okay, If I look at bank fixed deposits, which I invest in, because that's the only thing I can invest in, the rate has come down from 9% to 8%, 100 basis point cut in fixed deposits. So over time, this has to be passed through to the lending side. Now, obviously, not all the financing sources for the banks react the same way, and some of them take time to react. One of the things we are working on is this, revising the base rate structure so as to reflect the marginal cost of funds. And we are now, we have a framework. We are discussing with the bankers to, get their feedback. And soon we will have in position the revised base rate framework. Ideally, we want to migrate to a situation where the benchmark rate of which loans are priced is a market-based benchmark. So that is the medium-term objective. In the middle, we'll work through a marginal cost of funds base rate and go to that in the longer run.
Ticker plan there.
Good morning, Governor. This is Nishant from Take a Plan. And I have two questions. Firstly, the current level of foreign exchange reserves at around $350 billion, would that be sufficient to meet any contingency arising out of a Fed rate hike? And secondly, we've also seen some level of competitive devaluation of currencies in some developed countries. Recently, also, the government has pointed out that a weaker rupee will help exports. So what would be your advice to the government in such a case? And how should companies grapple with such a situation?
Again, starting with the second question about weak rupee. Yes, there are some people who want a weaker rupee. There are some people who want a stronger rupee. And I think even within the government, you can find all kinds of opinions. So I don't think there is a fixed opinion. I think going from what you want the rupee to be to whether you can achieve that. So let me finish. Whether you can achieve that, those are two different questions. You may want a particular level for the rupee, but what it takes to achieve that is also another question. We believe that broadly markets find the rate, right? And they will find the appropriate rate for the rupee. Where we sort of move in or intervene is when we find strong flows going in or going out in such a way that we think the rupee departs, significantly. There's significant movement. We don't quite know where fundamentals are, but there's significant movement one way or the other, and we believe that is temporary and not likely to be sustained. So to reduce volatility, we intervene in the markets. Now, because there's been substantial flows over the last few months, we have built up a sufficient stock of reserves, to your question of whether we'll be able to withstand volatility. I think the first line of defense, as we say in the statement, is good policy, which I think both the government and the RBI are engaged in. But the second line of defense is strong reserves. I think we have plenty.
प्रदीप पंड्या फ्रॉम CNBC आवाज़। सर, आपने महंगाई के बारे में जो कहा है कि पिछले साल भी बारिश कम हुई थी, लेकिन तब शायद बफर स्टॉक था। इस बार आप कह रहे हैं कि बफर स्टॉक कम है। खासतौर पे पल्सेस और ऑयल सीड में आपने कहा है कि बफर स्टॉक अवेलेबल नहीं है। तो क्या आपके इन्फ्लेशन फोरकास्ट में आपने ये फैक्टर इन किया हुआ है कि अगर 7% बारिश कम होती है या इससे भी ज़्यादा कम होती है तो फूड इन्फ्लेशन कितना बढ़ सकता है? क्या वो सब कुछ अकाउंटेड है?
We have accounted for a increase in food inflation in our forecast, which is why the forecasts have been raised. As far as pulses go, I mean, yes, you can't increase production in the short run, but there is a world market. So imports are possible if prices, and the government is looking at some of these possibilities. So I think food management, whether it's through buffer stocks, whether it's through logistics, whether it's through anti-hoarding sometimes measures, and whether it's through imports, and sometimes through exports if you have excess production. Those are all measures that can help in reducing the inflation. And I think government is looking at all these.
So if you allow one more question on transmission that you had just answered. We have been talking to banks, और banks का ये कहना है कि उनके cost of fund पिछले पॉलिसी से अब तक 5-7 बेसिस पॉइंट बढ़ गए हैं, ना कि कम हुए हैं। तो क्या आप उम्मीद कर रहे हैं कि अब ट्रांसमिशन होगा, अगर आपको भी यही फीडबैक दिया हो बैंक्स ने?
I will not comment on bank cost of funds. I think I've said enough in the previous policy statement.
Morning, Governor. Gabriel Perusini, Wall Street Journal. Since last Friday, India has become one of the fastest growing large economies in the world. And still, when you look at the RBI policy, you have delivered 3 rate cuts since the beginning of the year. Now, obviously, there is a discrepancy between the official reading of the GDP, as we know, and what you look at to define policy. So, you've given us several hints in the past of what are your favorite indicators. Could you give us an update if there is anything else that you look at or something that you've focused your attention on lately? And also, accessorily, could you give us an idea of what is the potential growth rate in India and if that has changed over the past months? Thank you.
I'll turn it over to Rajit in a second to talk about what his favorite indicators are. You know, it is a sort of discrepancy in the eyes of the world why we still think you know, the economy needs rate cuts when it's growing at 7.5%. Most economies growing at 7.5% are just going gangbusters, and the issue really is to restrain growth rather than to accelerate growth. We still have very weak investment. Investment is still very tepid. We haven't seen a strong pickup. And if you look at the corporate results, of course you have to adjust the corporate results for the fact that inflation has come down quite a bit, and in some of the in specific sectors inflation has come down much more than in other sectors. So you want to adjust for the level of inflation to see what the real growth has been. But in general, the corporate results have been quite weak also, suggesting that final demand is yet to pick up strongly. So those are reasons why we do feel that the economy is still below potential. Output gap is still somewhat negative, and that, you know, as these things reverse, of course, you know, then matters will change. There will be, you know, even with the 7.5% growth numbers, there's some discussion of how much that includes special factors in the last quarter, including excise taxes and subsidies. And so when you subtract that, the growth in the last quarter doesn't look as strong as before. And so, you know, you could point to those numbers also suggesting growth is weaker than at least the headline numbers suggest.